What's going on, my fellow stock market trader and investor homies? In today's video, we're going to be breaking down a big giant tech stock, a FANG stock that has been crushed. It's been decimated. It's crashing. However, I think it has a major upside potential. 300 or 400% upside from where it's trading at today. The stock had an earnings report this week and they missed horribly. It was an absolutely terrible quarter for, you guessed it, Netflix. Netflix stock has been decimated. It has crashed like I have never seen before. When's the last time you saw a FANG stock down 35% in a single trading day? I can't remember it, but Netflix had hit highs back in late 2021. November of 2021, it hit $700 a share. Right now, just a couple months later, we're currently trading at $212 per share. It has been a horrible couple of months for Netflix. So in today's video, we're going to be talking about why this crash is undergoing and why I think Netflix has 400% upside potential from today's price point. There's going to be some changes needed from the company's business model in order for this upside to actually happen, but we're starting to see these changes already going down. Nobody's talking about Netflix as a buy right now, and that's when I want to buy. When all the squares, all the suckers, all the fish are selling, they're scared, they're running for mama, they're selling out of their positions and hiding under the covers, that's when I'm looking to buy. Netflix isn't going anywhere. There's going to need to be some changes, but it's going to happen. And before you know it, we're going to be sitting on them tendies, baby. We're going to be sitting on the bag. We're collecting the bag while the squares and the fish are running for their mother's basement. All right, so first we're going to be looking at the earnings report that was so bad that has caused and been a catalyst for this crash. Then we'll talk about the business model changes that I personally believe need to happen in order for Netflix to right the ship and correct this crash. And third, we'll look at the chart, talk about where I want to buy Netflix stock and where my price target will be set at. Let's get it. Let's collect that bag, folks. Netflix shares crater 25% after company reports it lost subscribers for the first time in more than 10 years. We were seeing these headlines everywhere, and it was true. Over the last decade, Netflix has added subscribers in every single quarter. So it was a shock to investors when they came out and said that they had actually lost subscribers. So why the hell are subscribers jumping ship? Well, if you dive down into the report, 700,000 of those lost subscribers came from Russia. Netflix is no longer doing business in Russia, so they wiped those subscribers off the map. So if you exclude the Russian subscriber loss, then they actually gained about 500,000 subscribers. Still a terrible quarter. And that wasn't the worst part of the report. The worst part of the report was the guidance. Guidance is a projection of the future of a company. How is this company going to perform in the future? And they said that they're going to continue to lose subscribers. They expect to lose 2 million additional subscribers for the second quarter. The last time Netflix lost subscribers was October of 2011. The Netflix executives went on to say, our revenue growth has slowed considerably. Streaming is winning over linear, as we predicted. And Netflix titles are very popular globally. However, our relatively high household penetration, when including the large number of households sharing accounts, combined with competition, is creating revenue growth headwinds. So they're blaming this on increased competition, which is a valid point. We're seeing more and more streaming services come to market. However, they're also blaming it on sharing accounts. I know you are doing it. I know you're sharing those damn accounts. Yeah, I do it too. We all do it. And this is BS. This is a smokescreen. This is not due to sharing accounts, right? We all share accounts. We've all been sharing accounts, and we're all going to continue to share accounts. And if they try to end it by IP tracing or tracking your IP address, then it's just going to piss people off. Maybe they do need to do it, and it will just piss people off in the short term. But this is not the fix. This is not the solution to the problem. So what is the solution to this problem? Because there obviously is a problem. Here is the solution, folks. This is what's going to bring Netflix back to life. This is what is going to send Netflix stock flying back up towards all-time highs. Netflix to introduce ad-supported plans in a major shift. Netflix plans to offer cheaper ad-supported tiers to consumers over the next year or two. This is huge. It's going to piss some people off. Think about the amount of revenue that Netflix is going to be able to add to their bottom line by just implementing one pre-roll ad before every stream. Sure, it's going to piss some people off, but they'll get over it. Advertisers are going to be breaking down the door in order to try to get their money in front of these Netflix users. They're going to spend millions, billions, tons of money to get their ads in front of Netflix streamers. It is going to bring 3-4x increase of revenue to Netflix. And I'm sure they're going to roll it out slowly. It's going to be a gradual process, but it is going to save Netflix. All right, so not only are you going to have increased ad revenue, but what about the slowing down of subscriber growth, actually losing subscribers? Well, the increased revenue brought to Netflix by these ads is going to allow Netflix to produce better content in-house. We know that better content brings subscribers back in. Think about all the subscribers that Netflix gained from a show like Squid Games. Squid Games, globally popular show, and it brought millions of subscribers to Netflix. All right, some of those have canceled. They just signed up to watch Squid Games and left. But if you can continuously produce hit content, you're going to continuously be adding new subscribers. And the advertisements is just revenue rolling in hands over fist. So while scared and fearful investors were looking at the subscriber loss, I was looking at this here. Netflix to introduce ad-supported plans. This is huge for me, and this is why I'm investing in Netflix stock while it's crashing. Netflix was a growth stock. It was continuously adding new subscribers and growing. Now it's no longer a growth company because it's losing subscribers. And that has investors scared, and there is merit to that fear. There is merit to be scared when the growth company stops growing as fast as it previously was. However, I think it's a little bit overblown. There are some headwinds that they're going to have to break through, but I believe it happens. All right, right now we have a market cap of $100 billion on sales of $30 billion, giving us a price to sales ratio of around 3. As they roll out these advertisements, that price to sales ratio is going to go down as the revenue increases, making it a better and better value buy at this price point that we're trading at right now. If we go to the chart, got the daily chart pulled up on the screen. We're trading at $211 per share. It is my belief that we break below $200 as the fear in selling continues. And as we do break below that $200 price point, I'm a buyer. If we zoom out a little bit, the last time we were trading at this price was way back here in February of 2018. So it's been 4 years since we were trading at this price point. All of this was just noise, and we're right back where we started in February of 2018. You cannot tell me that this this advertisement rollout on Netflix is not going to bring increased revenue. It is not going to allow them to produce better content, which will in turn bring more subscribers to the platform. This is a value play, folks. This is a value buy, and it is my belief that Netflix will be right back up over 400, over 500, and approaching all-time highs in the next couple of years. So you may be thinking, oh, the next couple of years, Kevin, you want to hold this thing for 2-3 years? Absolutely. It has 3x potential back up to these all-time highs. A move back up to $700 is more than 3x. And if you tell me that if I hold a stock for 3 years, I'm going to get 3x upside, I'm going to buy it every single damn time. All right, so right now we are approaching $200 a share. Look at this support we got right down there at 180. So we got the support that we need to buy in front of, giving us an opportunity to buy the dip in front of support. I never like to buy a falling knife unless there's support below. We have that support at the 180 level. I'm going to be buying the dip in front of that 180 price point. I got a price target. I'm not going to be selling any of my Netflix stock until we hit 550. 550 per share is my first price target. Probably hold a little bit of that until we get back up to all-time highs. This is not a trade. This is a longer-term investment, multi-year investment for me, as I think Netflix will right the ship. My thesis is that the advertisements are going to increase revenue. The increased revenue is going to allow Netflix to spend more capital on their in-house produced content. This better content will in turn bring subscribers back to the platform. Let me know in the comments section below. Is it a dumb idea for Netflix to add advertisements? Will you leave Netflix if they add advertisements, or do you think it's a smart decision? Also, get some free stocks, folks. A lot of you guys haven't got your free stocks yet. 5 free stocks valued up to $17,000. Link in the description. My broker, Moomoo. Guaranteed. Deposit $100 or more, you're guaranteed a free share of NEO. I love you guys. I'll catch you in the next video. If you got anything of value from this video, hit the like button for me. Until next time, deuces.